Greetings, welcome in. Short week, but I am the Mr. Big of the charts. Okay, here we are, short week. So I'm not going to be here, obviously, on Thursday because I got stuff to do. Friday, I got stuff to do. Just kidding. There's only a half day on Friday, so you guys are going to be shopping anyways. So you don't need to do that. You need to go get your 5 to 10% discounts because of all of the supply chain shortages. So you can't get 30% anymore. You get 5. So have fun with that. But with that being said, I just saw your Tesla. Oh, okay. Some people like our valuation. Some people don't. Okay, let's see. News today. Tough to find news today. I'm not gonna lie. Let me X out of this. This is a crazy chat, so hopefully there's nothing bad in there. Let me X out of this. A few good minutes. Okay, let's see. Alibaba. Why don't we start with Alibaba? And guys, smash the like button for me. Oh, by the way, the day has finally come. I get my Tesla. 4 p.m. today. Finally get it. Now, let's see if I actually get it. I have a friend who went to pick it up. Everything was perfect. He walks right in. They're like, yeah, you can't take it today. So we'll see. Alibaba and others fall after Chinese scrutiny. Maybe the worst may be over. So I bought more Tesla. I bought more Alibaba on Friday, and that is the dizzle. So my cost basis is now $153. Alibaba, Tencent, Baidu, and other Chinese tech companies were under pressure on Monday after the country's competition regulator issued a flurry of new fines over the weekend, the latest installment of the antitrust investigations. We'll see. I don't care when this goes away. It's going to go away eventually. Alibaba's if you guys look at where we are doing, where they're going after these companies and the reason. So if you go back, let's go back in time about 10, 13, 12 years, whatever that could be. China gives very, very large incentives to tech companies such as Alibaba, Tencent, Baidu, JD.com to get themselves off the ground. They almost gave, I think that they were paying a 10% tax rate or something like that. Freudian slip. Mo wants to buy Tesla. So I think they give them, I think it's like a 10% tax rate. And now at this point, now that they've grown to a certain point, they never had the plan in place to increase that tax rate or whatever. So now it looks like there's regulatory pressures coming, but to me, it's just we're increasing. Could it? Am I underestimating it a little bit? Sure, but if you go from a 10% tax rate and you're going up from there, even if you're paying any fines, you got to pay your taxes. They're going to do it. China's not stupid. They're going to go after these big ass companies and do it. So, yeah, that's it. So you guys never discussed TCA. There's a video that we just did, Ragnar, that just came out last week. So anyways, with that being said, fears around China have also have widened the scope more than just regulatory pressures. This is the funniest part. E-commerce giant recently reported slowing quarterly growth. They forgot to slide in there. They just forgot to put this in there. It was 29% growth compared to what the analysts wanted, pushing the stock down more than 15% last week. Hey, if I see growth going at 29% and I see a 15% fall in a stock, you better believe I'm adding more. And adding to macro concerns about the world's largest economy. Analysts expect profits to grow around 15 to 20% over the next 2 to 3 years. I put in my discounted model, I put in even more. I think I put 10% growth in there, and it's still a value play. We think valuations have overcorrected. The sector is close to an inflection point. I really don't care about that, but whatever. All right, what's next? Let's see what the Fed. So this is what's that guy's name? Clardia? Richard Clardia. So he's a Fed vice chairman, and he basically said that the Fed needs to taper faster. So Fed Vice Chairman Clardia said on Friday that the upside risk to inflation should induce the Federal Open Market Committee (FOMC) to consider reducing its bond buying faster at its next meeting, which is December 14th through 15th, which is less than a month away from now. The initial increase in the federal funds target would have... So basically what they want to do is they want to get it down in the middle of 2022. That's the goal, June 2022. To be completely done with quantitative easing. We have to remember, even though they're tapering, they're still doing quantitative easing. So it's not like it's just gone. It's still going on. Oh, God, net ghost. Okay. Some comments that get blurred out, I just go, well, I enjoy them. I love that I can see everything. But unfortunately, you can't. Let's go to Black Friday stuff. So new inflation reports are going to come out this week. I'm excited to see what those are. I believe they're on Wednesday. No trading will take place on Thursday, of course. The stock market will close on Friday at 1. The bond market will close at 2 on Friday, which I don't understand. Why don't you just close the bond market and the stock market at the same time? I just don't get it. Personal consumption expenditures deflator for October will be out on Wednesday. This will help show how inflation has evolved in the United States and will likely show yet another elevated print on U.S. pressures. So core PCE numbers, which for whatever reason excludes food and energy, serves as the Fed's gauge for inflation. Here we go. Retailers. Quarterly results so far have largely reflected better than expected sales trends. Consumers have been reporting increasing anxiety over the impacts of inflation on their finances. University of Michigan, blah, blah, blah. Black Friday sales, we are expecting to see very small discounts, 5 to 10 percentage points as compared to, I think the average was 18 to 23 last year, or historically. A major question remains how retailers will manage this kind of demand that's lingering with the supply chain issues. I've gotten a lot of emails already. They're already starting new... They started them last week, the Black Friday stuff. I already bought some sunglasses from Ray-Ban. I had to get 3 pairs of sunglasses because who doesn't need 3 pairs of sunglasses? Partly because inventories and okay, I'm getting bored of this story. I don't want to talk about this one anymore. If I'm bored, you're certainly bored. Wages, low-wage workers see a huge reversal. This is an interesting story, an interesting perspective. I don't know if the statistics back it, but who am I to judge? Hardest hit by the pandemic in the beginning, low-wage workers are now reaping the biggest gains in their paycheck. The main reason, these workers are more susceptible to changes in the job market. So basically her argument is white-collar workers didn't really see any changes through everything that happened because they're there for a long time. They've worked their way up the ladder, et cetera, et cetera. And now that there's higher wages out there, the people in the lower wage category go out and start changing jobs, going and get better wages, et cetera. So it's a huge reversal in power. The only way that low-wage workers have any sort of leverage is if there's more job openings and more people searching. The bottom 25% of earners saw a 5.1% wage increase in October year over year. There's a lot of demand, of course. For instance, listen, leisure and hospitality have lost nearly half, 8.2 million of its 16.9 million pre-pandemic jobs. I don't really know if those are going to come back as soon as they think. That is a big reason. If you guys look back at my shows that I did in like March, April, and May, I was saying back then, if those jobs don't come back, we're not going to get back to our pre-pandemic levels. And it doesn't seem like they're coming back at that much of a rate. You have to think how many restaurants and hotels and all of that have gone under. And now with Airbnb, I think hotels might be they better step up their game in some way. A lot of high-wage workers have had long-term relationships with their good, bad conditions. Okay, all right, we're done here. Jeremy Siegel. Market is one bad inflation report away from a correction. So he's Jeremy Siegel. I think you guys have seen him on television. If the Fed gets tougher, I'm not sure the market is ready for a U-turn from Jerome Powell. Speaking of Jerome Powell, I guess it was supposed to be on Saturday. They were supposed to announce if it was going to be Jerome Powell or Lyle Brainerd taking over the Fed. Well, being nominated for the Fed, which either one that's nominated is more likely than not to be confirmed. I think that came out of the Senate. So we're going to see what happens. But the Fed is still doing quantitative easing. Siegel, this is the point that I just made about 5 minutes ago. You're still seeing everything is just getting worse. And oh my God, it's getting worse. Here's a good one. Peter Schiff. If you guys haven't read his book, Peter Schiff's book, what is the name of his book? You guys got to read this book. It's actually a really interesting book. Schiff. Crash Proof 2.0. Read this book. Crash Proof 2.0. No. It's Crash Proof 1.0. Either way, just go look up Peter Schiff and start reading. Look at his book. It's very interesting. He's the one that more or less predicted what was going to happen in 2008. But he is a person that just says the same thing, and he says it over and over. I think he's been saying that the market's going to crash since the day after we got a little bit of recovery in 2008. So that's the kind of person he is. But he does know what he's talking about. A strong economy does not produce inflation. So where do you go? Gold miners. The problem with the dollar is there's no intrinsic value. Gold will store its value, and you'll always be able to buy more food with your gold. Gold and a razor blade, you can walk around and shave it off and give it to your local supermarket. Cigarettes. He says recession-proof income stocks. He talks about tobacco. I think he said something about alcohol in here. So those are interesting ones to look at. And agriculture. How many times have I said it? Agriculture, materials, import. Those are the types of stocks that need to lead this market, not silly tech stocks. So here's agriculture. When it comes to playing defense, there's one thing that's recession-proof. Agriculture, it's simple. Whatever happens, people need to eat. If you ever watch the movie Mr. Brooks, he said there's two things that people are always going to need: cemeteries and water. Accurate statement. All right, what's the futures doing? What do we got here? Futures are up. Biden picks Powell as Federal Reserve. There you go. He just announced it. President Biden has renominated Jerome Powell for the second term. And that I think Lyle Brainerd, she's going to move into some climate role or some nonsense like that. So Jerome Powell is your nomination. Breaking news. There you go. I think that's better for the market as far as turbulence. If you don't want turbulence, I think you're good. Peter Schiff is like a broken clock. Peter Schiff is like a broken clock. That is absolutely correct. Y'all shorting the market? No. Okay. God. It's funny. Every time I'm shorting all of ARK's holdings. What's his name did that? He did not invest in funeral homes. No, I think you should invest in the land that you bury people in the ground. That's right. I don't think you should invest in funeral homes. Although the guy that lives across the street, he's in funeral homes and he seems like he's doing okay. 10-year yields drop 5 months, no bueno. I don't really think there's a point of doing earnings for some time. Zoom reports today, so that's disruptive. And anything else? Best Buy reports tomorrow. Wednesday, nada. Thursday's Thanksgiving. And these sorry companies report next week. What? Anything? Okay, there's nothing there. Here we go. If you want to join the software, I need to log out. If you want to join the software, 8 pillars, retirement calculator, stock analyzer tool, 8 pillars portfolio. That is where you can essentially build your own ETF. Why would you not want to build your own ETF? $29 a month gets you access to all of that. $29 a month gets you access to that. If you want to join the Bid and Ask Nation, join with me, learn about trading, and just talk with a community of 900 people, very well organized. $79 a month, you see all my trades that I make on a chart. You get Employed Trader Series, you get Trading 101 Series, you get my monthly seminars, which I will schedule for not this Saturday, but likely next Saturday. It'll be a private session with just the Bid and Ask Nation, and you guys can ask whatever questions that are burning through your brains at this moment in time. $500 a month gets you access to Paul's Super Shorts. Excuse me. Smash the like button, please. $750 gets you a one-on-one session with me, Zoom call, recorded, keep it for eternity, talk about whatever you want. If you need help raising your children, I will help you do that. Just kidding. I would not help you do that. It would be very bad advice. You might end up in prison. If you want to do a real estate deal with Paul, $10,000 for 4 hours of his time, and you will not end up like Zillow, who is up the creek without a paddle. Public service announcement. Trading View. What does this say? Black Friday sale up to 60% off plus 1 month free, ends in this much time. So Trading View, if you've ever wanted to upgrade, here you go. I don't know what to tell you. I just saved it because some people might like it. All right. Where we go here? Why do we have to look at the treasury yields again? Aha. Frank, good question. Why don't we pull up? I want to pull up pages. So Frank, the reason that I look at the yields daily is because I want to see if there's some sort of crazy reaction that happens. And I look for yield curve inversion. And in times of trouble, tumult, chaos, murkiness, and even the good times, you want to look and see what is happening with the yields because it gives you a foreshadowing of what's going to happen. So if we go down here and we pull up the yield. So I look at your 10-month, I look at your 10-year, well, let's erase this. Let's put 3 month, I look at your 3-month yield and I look at your 10-year yield. So basically what this says is if you give your money to the government for 3 months, 90 days, they're going to give you some kind of return on it. Right now it happens to be 0.05%. It's a pretty terrible rate, but compared to history, but you get 0.05% of your money back if you lend your money to the government for 3 months. For 10 years, if you give it to them, you lock your money up for 10 years, you can pull it out anytime you want, but you lock your money up for 10 years, you get 1.54%. Okay, so this makes sense. If you give your money over to the government for a longer period of time, you're going to get more money because you have more confidence in the government over a longer period of time than a shorter period of time. What I look for is this number to become greater than the 10-year, and that's called a yield curve inversion. So let's say that this number becomes 0.1, and this number becomes 0.08. That means that if you lend your money to the government for 90 days, you are going to get more of a return than if you lend your money to the government over 10 years. It just says there's tons of uncertainty that's happening. So if you go back and we look at 2020 and we go to February, let's go here, February. So here's the 10-year, third one over the 3 months. So if we go to, I think it was February 18th. Yes. So right here, February 18th, you were giving your money to the government over a 3-month period and getting 1.58% back on your money. If you gave it to them over 10 years, it was 1.55. So that's when you get a yield curve inversion. Every time there's a yield curve inversion, panic induces in the market, and then they start buying futures. They do whatever they can to revert that thing. Let's see how fast it happened. 1.58, 1.56. And it stayed inverted for a while, and look at this curve. It just kept going down, down, down. And this was during COVID. And things just kept getting worse and worse and worse when you had that massive pullback. So that is the reason that we look at the yield curve, Frank. Hope you understood that. Let's see. Okay, guys, send me some stocks. I'll hit them for you. And smash the like button while you're at it. Inflation is 5%, but they'll give you at least 3%. Well, we'll see. Hey, Mo, what does time matter on your engulfing candlesticks? I do a... There's an entry and exit point. What the hell is going on here? Entry and exit point seminar that I did in the chat. Okay. PayPal. Frank, answer and say, does that make sense to you? Because you're the one that answered the question. All right. PayPal. Hitting a strong support level. That's great. Okay, so here's the support level. Boom, boom. I've said it for 3 days now. I don't think that it's going to keep falling, but it's definitely going to keep falling. So if I think that the next level it could fall to is just below 180, because so right here, 1, 2, 3. Can you guys see that? Yes, you can. So that could be your next support level because it just keeps falling. So guys, if you're over here on a daily chart, every time, this is a beautiful short. Every time you get an engulfing candlestick, please just keep shorting it and go with it. Frank, I'm glad you saw that. That's wonderful. I'm glad you understood. Okay, Baba, why don't we do it? Baba, black sheep. Have you any wool? Well, according to the doom and gloom, Baba does not have any wool, but I'll go by the woolless. I've always wanted a hairless sheep. That's what I've always wanted in my life, so I think I finally bought one. So I think we're sitting at a very strong support level. The lowest I think we can get is 138 in the near term, and hopefully this bounces straight back up. This is already slowing down. It's not like it's taken a complete nosedive. This, however, is still nosediving, so I would really love to see a little bit of rebound today on this thing, and we would go from there. Okay, I will look at Neo, but I don't think they have a year of data, do they? Or do they? Yeah, they do. Okay, they have a year of data. So Neo, if you want to do anything, I wouldn't even look at it over here. Come over here on a swing trading chart. This isn't something you want to be in long term. They have one piece of news comes out and game over. So you're holding a 50-day moving average very tightly. This thing could easily bounce back up. You're getting buying volume. So PP, just go and look at this thing. Baba short, you do whatever you like. I am not shorting Baba. What do we got? Nvidia, why not? Just keeps going up. The Omniverse, baby. The Omniverse is back. All right, let's see what we have here. So I'm just going to look at the line. So this thing shot up, created some kind of support in here, which was great, and it's going just straight up. So I do think that this thing will likely come back now to about 310, which is not a bad thing. It could just come back here and consolidate and then keep going. Very erratic volume. That's the concern that I have. Nvidia has just been ripping for weeks on end. I mean, at some point, the party's over. Unfortunately for you, stocks don't just go up forever, contrary to popular belief. BBY, I know they report earnings. I believe it is tomorrow. Maybe it's Wednesday. I don't really know, but just make sure you're paying attention to that. If I'm you right now, I am thanking my lucky stars. You made an excellent trade. Your volume is starting to decline, which is no surprise because of volume. You're already starting to roll over here. You're going to open up here. I would exit my position based on earnings, and I would take all that money and run and then go and get a 10% discount on a pair of Echo sneakers. And there you go. All right, so Nike's having it. They're doing it again. Nike topped out here. It tried to break out here, fell right back down. It tried to do it on Friday, and it fell right back down. It cannot break this. It cannot break this all-time high. It just can't do it. So if you want to try to get through that all-time high, more power to you. Just use stops. Roku, disruptive as can be. I don't even know. My hand is hurting so much from shaking this disruption thing at Roku. Roku is very disruptive, though. It makes it very easy for me to watch Yellowstone on the television. Okay, so you're holding a support level right here. I could see it falling down to this, just, I don't know, 215, 210 level, whatever that is. But if you want to short this, if you get an engulfing candlestick down on the daily chart like I just drew, go ahead and short that. Keep going with it. Short it to the moon, which is in the other direction because of global warming. Disney. Oh, Disney's coming back to life. I really hope Disney comes down into this area, which would make no sense based on. So you have a pandemic. Nobody can go to the parks. The thing goes up here to $205 a share. Then everybody goes back to their parks. Everything's good. They're starting to make money again, and it comes down here. Noted. There's your rationality of markets right there. So if you think that markets are rational, I'm proving to you on this chart that they are not. So your gap filled over here. Why don't we zoom out just a touch more, see where support's going to be created. This gap is more likely than not going to fill around this 130 level, and you can bet if it's around 130, I'm going to be buying Mickey's underwear. Yellowstone is a great show. Yes, it is. TSM for trading. Let's see here. This is your bottom support level. Let's call it 107. This is, and it's just, let's call this top 125. So we've just been bouncing around in this 107 to 124, 125 level for the past, well, okay, what is going on? Basically the whole year. Basically the whole year. So if you're at this top level again, this is the same thing that's happening with Nike, except it's not an all-time high. So what do you need here? You need a ton of volume to break this out and try to chase this 140, 145 level. So it's going to be tough, but you can do it. You can do it. Activision Blizzard, are we doing this again? All right. Activision Blizzard. Let's zoom over here because we're going to be playing it on daily chart because this is all of this news. Let it calm down. This is the same thing as Alibaba. Why I told you not to go long on Alibaba long term. Okay. So the selling volume, here we go. The same thing that happened with Peloton. The selling volume is starting to fall off. Let me see if I can just make this a little bit bigger. Okay. Wow. You guys see the volume bars right here? See how they're declining? As soon as if we get selling like down here today, red selling volume, that's great because this thing is going to turn up and burn up and it's going to start shooting up and you're going to get a big day out of Activision Blizzard. So the selling volume seems to be over. The shorts seem to be leaving it and going from there. I heard a great quote the other day. Listen, markets always do what they're supposed to do, but they never do them when they're supposed to do them. That's very it. TX. The markets always do what they're supposed to do, but they never do them when they're supposed to do them. That's all you got to know. Guys, smash the like button, please. If you smash the like button and get it to 200 today, I will be a very happy camper. All right. With that happiness being said, here is a support line. It's sitting actually right at it. That was an amazing line. And here is your second line. So about 33 bucks. Now, the good thing that you have going for you right now, you drop below the 200 and it pulled right back up. You dropped below the 200 and it pulled, and it could pull it right back up. Let's see what happens. The volume is completely fallen off this thing. So I don't know what terranium is. It sounds like an element on the periodic table. So maybe somebody should ask Bill Nye about this one. All right. Bill Nye, the fake science guy. All right. Doesn't he not have a degree in science? That's why I said that. I think it's pretty funny. Although his show was entertaining back in the day. All right. So your next support level is down here at like, oh, that was a terrible line. Okay. Another terrible line. Maybe 425. I don't know. What is this? Yeah, probably 425. So let's zoom in a little bit. This is a dog stock. If you want to throw a tracker share on here, you're more than welcome to. This gap will likely fill. I have no idea when it will happen, but we are a dog stock right now, and this thing needs to pop right back up. So I wouldn't even trade. I mean, it's a $460 tracker share. I don't know if that's the best idea in the world. Just keep it on a tight leash. And if you get an engulfing candlestick down, keep shorting this. This is a great looking short. This has been a very good short on a swing trading chart on both ends. LPX. Louisiana Pacific. Louisiana. All right. So we are approaching these all-time highs again. It tried to get a good breakout on Friday and it failed. So that is not good. Now, with that being said, you're looking pretty decent over here. I would probably implore you to go and swing trade this thing and get it going. All right. Speaking of this week, I don't know. Short week. So with that being said, the volume is going to be very light. The fat cats on Wall Street certainly take their private jets and go to their beautiful getaways on Tuesday. So volume is going to be pretty light today, but more normal than usual. Tuesday afternoon, it's going to get pretty bad. Wednesday, it's going to be almost non-existent. Friday, you might as well and just sleep in and don't do anything. So that is kind of the trend of what happens on holiday weeks. So just be careful. The reason you guys could trade all you want. I'm not saying you can't. Just be careful that volume doesn't bite you in the ass, because that is going to be something that could get you. It looks like some stock is really soaring, but you happen to look and it's only buying volume. Next thing you know, everybody takes their profits and you burnt. So be careful. All right. Facebook. Looking really good. I would not go long on this until the yellow line gets into the sweet spot. Over here, it can't break over the 100-day moving average. It fell below the 100 in October, and it has not been able to get past the 100-day moving average, but for a few seconds here and there in intraday. So you got to get over the 100-day moving average, and you will be fine. Will next Monday be as good as I will? I'm not saying it will be. Next Monday should be pretty decent. Next Tuesday, everything will be back. What else do we have? Zoomies, Z-U-M-Z. I like Zoomies. Holy crap. What, are skateboarding shoes going extinct or something? My goodness gracious. I mean, Zoomies is a sweet store, but get your shorts ready. So move straight up. This is going to come back down. I'm telling you right now, this is going to come back down. We're already seeing the trend change over here. So guys, pay attention to this thing. This thing is going to come back down. This is your ultimate flagpole pattern. I don't get it, but I don't get a lot of things. So what do I know? Micron. We looked at Micron. There's another flagpole pattern. What is going on here? Micron will likely pull back to $75, and I don't think it'll hold the 200. It'll probably fall back below the 200. Let's see. The trend is looking very good, but I don't like this, what happened. That is not something that is very ideal in Daddy's world. All right, next. Pfizer. It's called Meta now. Actually, Frank, it is not called Meta now. It is not called Meta until, I think it's December 1st. What is it, PFE? Yeah, Pfizer. It's not called Meta until I believe December 1st is when they do the name change. So this is W City Central Grand Slam. Whoever found this stock, good boy. This thing is just beautiful. Get your W formations moving up. You want to talk about oven mitts? There you go. That's what that's oven mitt central right there. All right. Space. And what time is it? The market's going to open in 10 seconds. I'll take two more stocks. We have an interview with William Green today, author of Richer, Wiser, Happier. So we are going to do a great interview with William Green today. It's going to be, I'm really looking forward to speaking with him. Guys, think about it. William Green has talked to some of the greatest investors in the world. Charlie Munger, Manish Pabrai, Joel Greenblatt. It's incredible. So I think, what was the name? Sir John Templeton or something like that. So with Virgin Galactic, so I find it funny. They went to the moon here, but they fell right back down. And here's a head and shoulders pattern. Head, shoulders, shoulder, head, shoulders, shoulder, collapse. So I have a feeling that these are just rocket launchers and they're just building up steam like this. And then the thing is just going to explode to the moon, which is down. And because of, remember global warming. And then, yeah, we're good. All right. Two more. Visa. Visa. Remember the markers vis-a-vis? All right, here we go. The overhead projector. So this thing is absolutely a short from this perspective. If you get an engulfing candlestick going down, short this thing. I think that the fall started because of the bad news with Amazon in the UK. And yes, will it be live? No, it will not be live, but it will be recorded and you guys will get it. Gravity is higher at the moon. That's why. Makes sense. Airbnb short, A-R-N-B. Why do I always mess this one? A-B-N-B. Okay. I think I have something wrong with me when it comes to Airbnb. All right. Maybe I'm allergic to Airbnb. Both staying at somebody else's house, which is weird, but y'all don't have the germaphobe issues that I have, so it's okay. All right. Here is sporadic volume on the Airbnb. Short, let this thing get into the sweet spot coming down, and you can absolutely short it. Now, with that being said, there's a gap right here. If you want to short it on an engulfing candlestick on a swing trading chart, take profits going into the 25, then let it go to the 50. You will be a very happy camper, and we'll go from there. So, all right, guys, I'm out here for today. I will see you back here in 23 and a half hours. Same time, same place. Be careful out there. Go make disruption. Bye.